The upside is huge. Like it's 2 or 3 times what you get in residential. Let's look at it this way. So when you look at residential property investors, there's usually a few stages they go through. And correct me if I'm wrong, because you guys are obviously doing a lot more residuals than I am. Typically, they start off as a buy and hold investor. They'll find something that they're familiar with, they're comfortable with, within a price range. They'll buy and hold it, and then wait for the market to do its thing. So they might, on average, get 7% annual growth out of that property. Mm-hmm. And then the next stage, someone who's a little bit more sophisticated, they'll look for some sort of value add opportunity. Maybe they'll put a granny flat at the back. Maybe they'll knock down and rebuild, or do a bit of refurbishment or renovation. And they could expect maybe like a 10%, 15%, maybe uplift in equity doing that. And then finally, they graduate and become a property developer, right? So they either they'll do a duplex or a few townhouses, or some people do really, really well. They build multiple units, and things like that. But that's, generally speaking, that's kind of like the progression. So you kind of go from 7% per annum to maybe like a 10, 15%, and then to a property developer maybe like 20, 25%, right? That's kind of the progression. So when you look at commercial properties, obviously you can still have the buy and hold strategies and all the type of things, but what you'll find is with commercial property leases, they always have a annual review of the rent. Sometimes it's CPI, sometimes it's fixed 3%, 4%, 5%, depending on what it is. Quite often there's a market review that's applicable to the lease if the tenant exercises their option. And that's where most of the commercial property investors make their money, is at the market review. So let's look at the last couple of years. So ever since the pandemic, we've seen industrial property prices just skyrocket. And that's a combination of different factors, obviously rise in e-commerce and all that type of stuff, which we won't get into today. But let's say you bought a factory somewhere in Australia. Let's say you paid $1 million for it. Let's say you bought it, at the back end of 2019. You could expect probably a 50 to 60% increase in rent today from when you bought it. That would directly correlate to a 50 to 60% increase in the value of the property.
Right. That's insane.
Yeah, right. And then you look at residential property. Let's say bought something in 2019, residential property. I guess in some markets it's gone, 50, 60%. But generally speaking, probably 30-ish% maybe, right? So that's one side of things. That's probably 2x from there onwards. And then you look at sort of the value add opportunities in commercial property. The opportunities are endless. So you can, for example, very easily buy a commercial property that's undervalued, and there's a number of reasons why the property is undervalued. And one of the main reasons is because there is a lease in place that's putting pressure on the value of the property. So what I mean by that is, like I mentioned, industrial property rents has gone up 50%. Let's say there was a tenant that signed a lease in 2018. They were paying 2018 rent, and they've signed up on an incremental increase of, let's say, 4%. Fast forward 5 years, 2023.
Which is not even CPI right now.
But fast forward to 2023, market rents have gone up 60%, but their rent's only gone up by 4% per annum. So they're probably paying about 40% under market rent as a result of that. So we're starting to see a lot of that happening. So a lot of our clients are starting to find these from us. We're trying to help our clients find these type of properties where it's under rented. There's an existing tenant in place. They're paying 2018 rents, and their lease is about to expire. So we want to acquire these properties and then hit the tenant with market review upon lease expiry, and then get that 30, 40% rental uplift.
Yeah.
So if you had a lease and the tenant's paying below market rent, that lease is actually making your property worth less. So it's very often we see commercial properties actually worth more vacant. That's why a lot of commercial property investors, they were trying to find ways to kick the tenant out.
Yeah.
Some do it ethically and some do it, other ways. But yeah, to answer your point, that's exactly right.
Because I think it's worth especially because for our audience may not know this, I certainly didn't know it as well before the conversation, so I've learned a lot today too. So we may well have a vendor who knows the property is worth more on the open market, but they know for anyone coming in, they simply cannot get the finance for more, right? And every valuation is going to show below what they could get if they were to sell it reasonably. So knowing that someone can't finance this could be a $2-3 million property, who's going to come up to you with bags of money, right? And if they can, they're the one buyer in the market who could do it. So then they can call their terms too.
Exactly. Yeah, exactly. And I get asked this really often. It's like, oh, so why? So if there's so much upside in this property, why doesn't the owner just do it themselves? Well, the thing is, like, a lot of people have very different reasons of selling. They could be going for a divorce, or it could be a death in the family, or it could be they're retiring, or maybe they're just trying to rebalance their portfolio. There are so many reasons why people are selling, and who cares? As long as the buyer's in the right place, right time, has got the capacity to take advantage of it, then great.